Okay, folks, so we've got a lot to get through on this current GME situation, and I want to try to go through it all and what you should know before Monday. This is going to be a quick informal video, but here's what we're going to cover. We're going to cover the GME offering and earnings. We're going to cover what Roaring Kitty accomplished with his live stream. We're going to cover the halts, and we're going to cover predictions and key price points for Monday. First, of course, as always, make sure that you do your own due diligence on all ideas presented here on the channel. If you're the one taking the risk, you got to be the one doing the ultimate frisk. And of course, coupon code Kitty50 is still on if you want to get 50% off our options course, our private chat, and our options alerts, all included in that one program. Link down below. Let's get to work. So GME hit highs at $67.50 in the after hours Thursday night, which just about made Kitty a billionaire, give or take, and it held within the 50 to mid 60s range upon pre-market open Friday morning. And then GME decided to pre-release earnings and announce another offering. The earnings were bad, sales were down substantially, some 29%, so on and so forth. But we already had a good idea that this report was going to be bad because they released preliminary data on this report weeks ago anyways. My guess is the reason they released the full report early was to avoid getting any SEC pushback for doing what really caused the price to fall, which was the offering. And while this was technically just a filing allowing them to do a future offering, it's probably likely that the offering itself has been or will be completed very soon, similar to the last offering. So markets are going to treat it the same. It's very common to see regulators or everyday people accusing companies of trying to get an unfair pricing advantage on a stock before earnings by issuing shares before earnings, especially at bad earnings. Well, with GME releasing earnings alongside the offering, well, that ensured that wasn't going to happen. You could also speculate that it does seem to be the case, weirdly enough, that every time you're at a peak opportunity for a meme stock, whether that's AMC or GME, it just seems like the management loves to all of a sudden wreck that opportunity by doing a bad press release or, of course, a massive offering. You could speculate on whether or not they're doing that on purpose or whatever your opinion is. Maybe they're just taking advantage of the high share price at peak opportunity. Who knows? Follow your own opinion on that. Nobody's trying to get sued here. But regardless, the offering news was the real reason why GME fell early in the pre-market on Friday. Filing to offer some 75 million shares just a month after offering 45 million shares is just not good news, especially for a stock whose primary bullish thesis revolves around there being a shortage of shares. That said, truth be told, if you're looking at the numbers, well, 75 million more shares issued isn't going to derail a squeeze. We saw AMC issue far more than that in the early AMC rally days. Nonetheless, AMC kept going higher. But eventually, just like there was with AMC, there's going to become a point where too much dilution derails everything. There's a red line where you cross that red line and all of a sudden you've destroyed the overall momentum. Your stock might rally on meme hot days, but you're never going to get back to all-time highs because there's just too many shares out there to justify any kind of short squeeze. I don't think we are quite at that point yet with GME, but we certainly might get there. I think we got maybe 2 or 3 more offerings left until we've got another AMC situation on our hand. Now would be a great time for the GME board to come out and say, you know what? We've had enough of the offerings. We're not going to do another offering for just one more quarter. That's all they need to say. If they agree not to do an offering for a full quarter, then guess what happens? Stock goes up. If they don't say that, that means that people buying in are going to think every single time the stock goes up to a new level, they're just going to do a massive offering and dumpito. So if you're a shareholder in GME, I recommend maybe tweeting them and saying, we don't want more offerings. GME is owned by its shareholders and it's supposed to work. And the board is supposed to work for its shareholders. If they decide that it's more important to raise endless amounts of capital that they clearly don't need if you look at their balance sheet, well, they obviously are not looking out for the shareholders. At least that's my opinion. Some people think that endless dilution is great for shareholders. Well, I'm not one of those folks. Okay, number 2, I want to talk about what Roaring Kitty accomplished with his live stream. So I tuned in live and the guy was around 30 minutes late. He was dressed up in bandages and a broken arm sling and he was joking around the whole time. And quite frankly, I mean, if you watch this guy back in 2020 and 2021, this is just the guy's personality. You can't expect somebody that posts memes and random YOLO positions to come on in a suit and talk about why they were in a stock. That's just not his personality. Yes, expectations are high. I mean, this is the guy who the media has been covering consistently and the guy who became a billionaire by shorting billionaires, at least for a few moments. But I think a lot of people that hadn't really seen him before, hadn't really studied him, were expecting a different type of live stream and he didn't give it to them. Even myself, I was thinking, hey, you know what? He might exercise his options live and that would be a very positive thing for the stock, but he didn't do that either. However, honestly, he still did accomplish a lot in this live stream and overall, I think it was a subtle but resounding win. And I'm going to explain why I think it's actually going to help boost the momentum for GME stock to the next level come the next couple of weeks. And I'm going to give you my receipts for this, and if you disagree, fine, but at least hear me out here. First one is that he showed that it is indeed him posting, not someone who hacked or bought his accounts. That was a big worry. He completely pushed that aside. Number two, he clarified that no outside parties were backing him. That was another big worry. Perhaps he was bought and paid for. Lots of people were worried about that, at least according to him on that live stream. Well, he said that's not true. Number three, he gave a new thesis, a new bullish thesis for GME. He explained a possible GME turnaround plan, which we can get into in a different video. But number five, he really effectively trolled Wall Street analyst firms, hedge funds, and really the media that have been up in arms about GME since the beginning. Just look at how CNBC had to react to them live. I can't imagine the personal satisfaction. And number six, he continued the meme style personality that made him famous in the first place. And these were my opinions that I had shortly after the live stream, and I tweeted these. So if you've already seen these before, well, that's the clarification on that. But after I posted that, I started thinking for a couple more hours, and I watched the video again. I watched the live stream again, and I found a bigger picture that maybe you also picked up on. There was a much bigger message that Roaring Kitty tried to present here, in my opinion. You see, folks, when Roaring Kitty was live streaming, his own position had hemorrhaged and was continuing to hemorrhage hundreds of millions of dollars. Yet he's sitting there joking around with a beer. He's laughing off the offering that GME did as a birthday present. He's quoting The Dark Knight, and he doesn't seem to care at all when he shows his position being down. And not only that, but if you looked at the chat during certain points in that live stream, some tens of thousands of people were upset with him. Lots of people that made tons of money, but were very quick to villainize him when the stock just took a dump that took us back to yesterday's levels. He was stoic in losing hundreds of millions of dollars. He was stoic in tens of thousands of people being upset with him. Why? Why was he so stoic? Why was he so careless? Why did those things not bother him? Why was he able to just sit there and joke around with the beer and be his usual self? In Kitty's first live stream in 3 years, he showcased one thing more than anything. And that is that he doesn't care what goes on with the stock on the intraday chart. He doesn't care what people think about him, what he believes in. All he cares about is his thesis. And he believes in that thesis. Don't believe me? Well, think about this, folks. The only people that don't care and don't flinch when they are down hundreds of millions of dollars are ones that believe so much in their position that whatever happens to said position in the medium term, well, nothing phases them. If you believe in something as much as you believe in gravity, well, quite frankly, nothing is going to phase you. And whether he's right or wrong, it's that same attitude that got him to the point that he's at today. And I believe, folks, that that was the big win of this live stream. The live stream said, it's me, I'm real, I'm in the stock, I believe in the stock, here's a few reasons I believe in the stock, I believe it's going up, I still believe in it. Now, a lot of people will be upset with that because they're like, well, what if the stock goes down? If it goes down, doesn't that mean the thesis is wrong? Well, that's not what he's saying. He's saying that the thesis is a bigger picture view. You can agree or disagree with it, you can agree or disagree with his style, but he is saying here that he does not care about the middle movements, he does not care. What he cares about is the bigger picture. And if that was the main goal of the live stream, he completely blew it out of the park. Next, let's go into the halt situation. So GME on Friday was halted no less than 17 times. 17 times. It was halted when Roaring Kitty's live stream was supposed to start, and then halted when he came on some 30 minutes late. Halted throughout most of the stream, and nearly every time it was unhalted, it had a new dump. Now look, I'm going to speak generally about halts because a lot of people are concerned about this. But halts can be weaponized very easily in theory. If, for example, a fund of hedge wants to stop a rally from happening, which I am not saying did happen or didn't happen or whatever the hell, but it's easy to weaponize it because they can simply dump massive amounts of shares in a minute and boom, crash, that triggers a halt happens. Which might be the very reason that most of the biggest moves for GME to the upside have happened in the extended hours trading, when there are no halts. Now let's talk about what to expect come Monday. So one big thing you need to keep in mind is firepower. Roaring Kitty had about 600,000 viewers live watching him. If you have 600,000 viewers live in the middle of a workday, it's not hard to imagine there's lots and lots of people who are ardently holding, buy and holding, adding to, and continuing to support GME. And there's probably another 1 million or 1.5 million more who couldn't make it to that live stream that ended up watching it later or watched the summary summary of it later, that are also ardent followers, maybe slightly less ardent, but still ardent. Right now I'm looking at this and it looks like that live stream is well over 2 million views. Maybe you got some bots or some rewatches, but overall, you got about 2 million folks over there. And there's this Twitter situation. My tweet on him alone yesterday got 2.4 million views, but that's nowhere near what he gets. His Uno reverse card tweet got about 13 million views. His original tweet got about 28 million views. Probably there's a lot of bystanders and overlap in people that revisited the tweet. So maybe those numbers aren't completely accurate. So let's be super duper conservative. And let's say that he's got about 100K top tier ardent supporters and their positions average at about 10K. Some way higher, some way lower, as that's how averages work. Then you got 500K moderate supporters averaging at about 5K in a position size. And then you have a million lightweight supporters averaging at about a 1K position size. And then you have tons of people on the sidelines just bystanding, right? Little lovely bystanders. Now, I know there's tons of people that have more than 100K in GME stock, and that's all great and dandy, but we're talking about very rough numbers and rough averages here. So in total, we'll say he's got about 1.6 million people following him with some form of position. So what do the numbers come out to in total value? Well, 100K ardent supporters times $10,000 equals about $1 billion. 500K moderate supporters with positions of an average of $5,000 comes out to $2.5 billion. 1 million light supporters, lightweight supporters, at $1,000 of position size, that's $1 billion. So you add all that up, 1 billion plus 1 billion plus 2.5 billion, you get 4.5 billion. So Mr. Roaring Kitty, Keith Gill, deep effing value, well, he has a fairly direct communication line to about $4.5 billion of retail capital. And of course, depending on where GME is trading, he has another $1 billion or so of influence with his own position. Now, if we are at a stage where retail money and a tight float are still the primary drivers of GME stock, well, the way to analyze GME stock is then asking where that $4.5 billion is going to go next. Is it going to move? Is it going to stay? Or is it going to see more added to it? And that money stems from retail. So you got to ask yourself, heading into Monday, is the average retail investor going to be more bullish or less bullish after this live stream on Friday? And I think immediately less bullish because, yeah, at the offering, a lot of people poopy duped on the Roaring Kitty live stream. But I think as the days go on and people look at this again on Saturday and Sunday, well, I think that people are going to come to the conclusion that at worst, this was positive for the stock. Why? Well, because Roaring Kitty proved all the things that I mentioned before. He proved that it's him. He explained his thesis. And he showed how many people are in the stock, and he also showed that he's stoic because the overall thesis is still in place. Again, you can agree with those points or not agree with those points, but in my opinion, I think most people are going to wake up on Monday more bullish, not less bullish than they were at close on Friday. I think there's also a sizable chunk of people that maybe they won't be bullish on Monday, but once they start seeing that price go up again, they're going to become bullish real fast. My opinion, and based on historical data from GME, but it does tend to be the case that that's what goes on. People don't really like to buy when something is down. A small chunk of people like to buy when it starts recovering. A medium chunk likes to buy when it's midway recovering. And then a lot of people like to buy once it's already started getting up to a new high. And those also tend to be the people that are upset the most when the stock dumps because they lost the most amount of money and they don't understand that it makes more sense to do risk managed positions lower down. But nonetheless, now I've made tons of videos over the last couple of weeks talking about the GME situation, and I've said over and over again every single time GME has gone down that yes, I see another surge coming. And once again, I'm here today to say that yes, once again, I do see a surge coming for all the reasons that I mentioned in today's video. You can let me know your thoughts down below, but I do want to leave you with one final cautionary message, and then I'll let you go about your weekend. I think at the end of the day, Mr. Roaring Kitty is going to be absolutely vilified. He might walk away a multi-billionaire, but at the end of the day, he'll walk away very much a villain. And why is that? Why? Because lots of people will refuse to get out no matter how high the price goes and will inevitably see themselves blowing up when it goes back down. Lots of people that have been on the sidelines building their conviction for a long time won't get in until the top. And then once they get in very, very shortly, they're going to see their position blow out as well. So if you're one of those people and you want to play the game that way, it's fine. But you have to have the self-responsibility. You have to be able to look at yourself and say, okay, well, this is what I'm getting myself into. That's fine. And if it's not fine, then don't do it. My opinion, you could do whatever the hell you want. But look, I know because I've been on YouTube for many years. Lots of people will ride a stock all the way to the top, thousands of percentage points up, and then end up losing all of their money because they believe buy and hold is the only way to go. Or they just simply don't think about an exit strategy, or they have no real plan for a position. My thought process is you're in a position for a reason. You need to have some sort of plan plan? What happens when it gets to $500 a share if it gets there? What about $100 a share? Are you taking some profits off the table? Because quite frankly, GME is taking some profits off the table. Mr. Kitty seems like a great guy, but he's just a guy that likes the stock, is invested in it, and presents on it. It is up to you to take your own responsibility and do your own due diligence and understand your own risks. And I say that with all the love in the world, because I just know that at the end of the day, no matter how high this goes, lots of people are going to be very, very upset. That caps off today's video. Make sure to let us know down below what you think. What do you think's coming for GME next? And have a great weekend. Make sure to take advantage of that Kitty 50% off code on ZipTrader options. We'll see you in the next one.